Hello traders, my name is Gregor Holak and welcome to a new free video update for the end of the week, in which I will actually update you on crude oil and New Zealand dollar. Last week I talked about crude oil and I said that we have seen a significant break out of this reverse head and shoulders pattern, so I was looking and I'm still looking for this bull market to continue. So on the way up I'm tracking that each pullback will be seen as a temporary pause, which means correction within uptrend. As you know, market never moves in straight lines, so corrections are healthy within ongoing uptrend. So last week we talked about this wave 4. I said that pullback could take us slower into wave 4. Normally when you have a sub wave 5 of an extended wave 3, which was the case here, extended, okay, then typically you will see a retracement back to the starting point of a previous wave 4, not necessarily the end point of a wave 4, or termination point if you want, which was at 53.80. So actually market topped out, bottomed out, as you can see, at these levels, also at around 38.2%, which is perfect level for fourth wave retracement compared to this extended wave 3. So I'm not surprised actually to see a bounce here. It was a very nice healthy correction. It was a sharp drop for a wave C, I must admit, so probably this drop just pulled in a lot of traders who wanted to short this market, and now they are caught on the wrong side. And I really like this price action at the moment, because if you count 3 waves of decline from the highs, as you know, this is structure of a correction, A, B, C, then you know that price when it reverses should retrace into territory of a wave A, because this overlap actually invalidates any bearish interpretation. Okay, so to me it's very important to see price trading now in wave A, because this actually is a confirmation that market made a 3 waves of decline, and that wave 4 is either completed or it will turn to a more complex pattern. But important is that it is a corrective decline from these November highs to current November lows, and that more likely we will see a continuation to the upside. And if we consider that the market is in a strong uptrend, then we really should consider a potential scenario for a push up into wave 3, which is shown here on a daily chart. So I'm looking actually for a push up towards $60 per barrel, guys. It's 138.2 and 161.8% extension of this red wave 1 measured from this red wave 2 swing low from 49.20. So I'm looking higher. Also, what I like to see here is a recent break out of this channel and now retracement back towards this channel. So this trend line could react as a nice support here for a final push up into wave 3. So clearly I remain on the bullish side here in crude oil. Also, I actually prepared an alternate count, or I should say count 2, which is slightly different. It suggests that we are here in a final leg up of a corrective advance, guys, from 2016 low. So I'm also, of course, very open-minded. It could be just a temporary bounce, and we could see crude oil turning back to the downside in 2018. However, even if this count will prove to be correct, we still need 5 waves to the upside within black wave C. Okay, so both wave counts suggest that there is room for $60 per barrel, or maybe even 63, 64 levels, because I have here labeled wave A, then maybe a triangle for wave B, and if you project 61.8% of wave A measured from this end of a wave B, you came out with a $60 per barrel. Also, if you take a look on this higher time frame, there's 63.20 swing high wave 4 back from 2015 that could be retested. Okay, so definitely for the next few months, weeks, I'm still remaining on the bullish side of crude oil. Okay, now let's take a look on the New Zealand dollar. On New Zealand dollar, what we actually see here is market now trading at a new swing low, and it looks like that we are here in a final piece of this blue wave 3. I was looking here for a push towards 161.8%, which is around 100 pips away. So for next week we could see a temporary bounce up into wave 4 and then a new continuation to the downside. But it's really important to understand that market is falling now very sharply down from this September highs. yes, it was a September high, and that move is getting extended, and this is typical for third wave price action. So I really think that we could be here in impulsive sell-off, and if that's the case, then you know that market has accomplished this corrective bounce up from 2015 lows. Also, Aussie dollar is in a very similar situation. Actually, I can look at this one very quickly. You can see here that I counted a 3-wave rally from 2015 lows. Is seen as a wave 4, which also retraced back into area of former wave 4, same type like I showed you on that crude oil, that I'm expecting a wave 4 of that lesser degree to retest it. So we have seen something similar here on Aussie dollar, and now reversing very nicely to the downside, and it looks like there is more weakness coming because we have 5 waves of decline from the highs. We are now at this trendline support, so now I'm just wondering if this trendline will give way next week, or maybe we will get a 3-wave rally, ideally up into wave 2 before market gets even stronger and start accelerating to the bearish side. Now it's very important also to keep an eye on the weekly or monthly price structures. Clearly there is a downtrend in progress since 2011, so I definitely want to stay on this side of a trend. We are now sitting at this trend line support, so normally at important trend lines you will see market consolidating, and once consolidation is finished you may see a sharp drop. So markets, as you know, patterns are fractal, so I'm not actually surprised to see very nice unfolding patterns here on monthly chart, very similar like we see on a 4-hour intraday chart, which actually gives us better risk reward trades if you want to trade them. And actually we were in a 4-hour swing here on Aussie dollar. If we take a look, actually we are in since October 17 and still in. And what is really key here is that this was here, I believe. What is really interesting here that we always try to leave my targets open, because you never know how far and how fast market will move. Okay, so there can be opportunities that will give you a ton of potential pips compared to, or rather than just 1 to 2, maybe 1 to 3. Okay, so this one is working very, very well, and we have something similar on crude oil as well, as I know. So this one was from October 23rd, and we closed it this week, and actually it could be a new opportunity coming next week, especially if crude oil will stay and close on the bullish side today, which is Friday, and so far it looks very promising. Okay, traders, thank you very much for your attention, and I will catch you next week with our new videos and new free analysis. Have a good day. Bye.